Hey traders, in today's video we'll be explaining exactly how to use pivot points in your trading, as well as going over a pivot point trading strategy. Let's get into it. So here we have a chart with a standard pivot point indicator added to it. We have a blue line in the middle of the chart which is labelled P. This is our middle pivot point. We then have three lines above this pivot labelled R1, R2 and R3. The R stands for resistance, meaning that these levels will tend to act as resistance when price reaches them. We also have three lines below this pivot labelled S1, S2 and S3. The S stands for support, meaning that these levels will tend to act as support when price reaches them. The majority of price movement on a typical trading day will tend to occur between the levels of S1 and R1. That's not to say that price can't move past these levels, it's just saying that the majority of price movement will happen inside of this area. You'll occasionally see days when the market is in a very strong trend, where it's not uncommon to see price reach all the way down to S3 or all the way up to R3. For example, here you can see that after a small bounce off of R1 near the start of the day, price breaks through R1, shoots upwards and breaks through R2 and makes it all the way to R3 before the day is over. So while these kinds of days are less common than others, you'll definitely see them happen from time to time. So there are three main ways that we can use pivot points in our trading. The first way that we can use them is to help determine the overall sentiment of the market. When price is trading above the middle pivot and remaining above it, then it's generally said that there is a bullish sentiment in the market, so we would be on the lookout for buy trades. When price is trading below the middle pivot on the other hand, and remaining below it, then it's generally said that there is a bearish sentiment in the market, so we would be on the lookout for sell trades. And of course, there will be days where there is no clear sentiment in the market either way. Price might start moving below the middle pivot and then get back above it, and then again move back below it. On days like these, it would seem that neither buyers or sellers are in control, but that doesn't mean that there are no trade opportunities present. When neither side are in control, there can often be trade opportunities available by looking for a buy trade when price reaches S1, or looking for a sell trade when price reaches R1. The second way you can use pivot points are as a form of static support and resistance. This is great for traders who have trouble identifying support and resistance on a regular candlestick chart and are looking for clear levels to base their trades off. But this is where some traders make a mistake. Every time price reaches a resistance level, they'll blindly take a sell trade, and every time price reaches a support level, they'll do the same for a buy trade. But this alone is not an effective trading strategy. After all, think back to our previous example where price broke through R1, R2 and R3 all in one day. Blindly taking a sell trade each time that happened would have resulted in 3 losing trades in a row. This is why we don't automatically trade every time price reaches these pivot levels, but rather we combine pivot points with other forms of market analysis in order to increase the probabilities of our trades, which we'll go over in a second. The third way that pivot points are used are as take profit levels. For example, if you've identified a market that is currently in a range, you may wish to use the S1 and R1 levels to aim for as your profit targets, since price is very likely to hit these levels during a sideways moving market. Whereas if you've identified a strong trend on the higher time frames, you may wish to use the further out support and resistance levels to take profit at. For example, here we have a market that is currently in an uptrend. If you took a buy trade at S1, then you could have used the R1, R2 and R3 levels to set your profit targets at, by taking a portion of your trade off when price reaches each of these targets. Okay, now that we know how pivot points work, let's go over a pivot point trading strategy. So here we have a 4-hour chart of the dollar Canadian. We're going to use this higher time frame chart to help establish a directional bias, which we can combine with the pivot points on the intraday chart to find a trade entry. So we currently have a level of resistance above price here. This level acted as support initially when we saw 2 rejections from price. Then price broke through and tested the level from underneath shortly after, where this level now acted as resistance. We saw price close above the level on this strong green candle here, but this was immediately rejected on the next candle, which again closed back below. And we see one final rejection from this level on the far right. For our level of support, we have this longer term low on the left here, which saw a sharp rejection to the upside from price. If price is able to break below this level, then there may be an opportunity for a breakout trade to the downside, but in this example, the level acted as support and was rejected to the upside when price reached it later. So let's zoom in on this area of the chart and go down to the lower time frame so that we can use the pivot points to help us find a trade entry. So here we are on a 5-minute chart of the dollar Canadian, in the same area where we're just looking at on the 4-hour chart. Here is our 4-hour level of support. Notice how price responded to this area the previous day. We saw price stalling at the level when it first reached it. Then, a strong red candle closes below the level, but this gets immediately rejected to the upside. We then see multiple rejections from price at that level towards the end of the day. So when price opened up on the following day and we notice that it's unwilling to move back below this 4-hour level, this should give us a warning sign that we're going to see an uptrend take place this day. So given this information, we're going to want to avoid taking sell trades. It may be tempting to enter a sell trade when price reaches the mid pivot or the resistance levels above, but this is not a good idea. During an uptrend, the reactions you see at resistance will often be small, and price will tend to move past resistance levels, so we recommend to avoid taking sell trades in this kind of situation. Here's what we're going to do instead. When price gets above the mid pivot and is showing a willingness to remain above it, then we're going to look to enter a buy trade. In this example, you can see that we have a small bounce off the mid pivot initially, but price continues higher and manages to remain above the level. Notice this short-term level of resistance forming on the 5-minute chart. When price breaks above this level of resistance, we can expect it to act as support when price returns to it. In this example, we see a small push higher and price quickly returns to this level of support. We see these small red candles as we move down into support, and then a larger green candle, which engulfs the two previous red candles. This would be our trigger to enter a buy trade, with a stop loss placed below the mid pivot. We would use the R1, R2 and R3 levels above as our profit targets and close our trade in portions as price reaches these levels. Price reaches the first profit target at R1 fairly quickly and we see a small bounce off this level. But before long, price gets back above this level and continues to form a pattern of making higher highs and higher lows as the uptrend continues. Price then breaks through R2 and hits the second profit target. So when this happens, we would have one portion of the trade remaining, holding it in the hopes that price will reach R3. In this example, however, price stops short of that level. We see a push up from price here, a small pullback, and then another push up, which only manages to go slightly higher. We see one final attempt from buyers to go higher here, but again this gets rejected. So we now have 3 attempts from buyers to push higher, and price then closes below this short-term level of support on a strong red candle. This is a clue that sellers are coming back into the market, and given the fact that it's nearing the end of the trading day, we would use this opportunity to close the remaining portion of our trade, since price is unable to reach all the way to R3 for our final profit target. It's important to be flexible with your profit targets in this way, since price won't always reach where you wanted it to go. If you enjoyed today's video, then please leave a like below as it really helps the channel out. Happy trading!